All right, sweet. Hey, everybody. Welcome to the MakerDAO community call. Today is October 27th. It is a fine Tuesday afternoon, almost afternoon, noon in New York. So if you're new to the call, this call typically we cover kind of the week at MakerDAO, what's happening in the land of governance, what's happening with like business integrations, partners, like different community highlights. Pretty much any current events that are happening around the Maker ecosystem, we try to cover in this call. But we also use this call to invite really interesting guests on that are building around the Maker ecosystem, whether it's with DAI or with the Maker Protocol directly. We like to kind of get people on, have them show the community what they're building, give the community a chance to ask questions, to dig deeper, kind of do like a red team, blue team type of thing, and keep builders asking the hard questions, trying to find kind of holes in the design, trying to find what solutions the teams used to tackle like some of the obstacles that they've encountered. But generally speaking, we love having guests, and today we have a couple of really good ones. Well, actually, it's one guest but two people. So B.Protocol is going to be on the call today. I'm actually going to invite them on screen now. And the agenda for the call will be basically for the first 45 minutes, we're going to go through basically a presentation and demo that's going to be done by Yaron and Eitan. And here I'm going to invite them on screen. And then for the last 15 minutes, we can continue and go into like extended Q&A as needed. Or we can do like a short dive into the this week's Maker Relay. And just as a reminder, we use Maker Relay to kind of get what the current events are. And if we don't cover Maker Relay in today's call, there's a little call to action button right there. It's like a little green and it says Maker Relay. If you click that, it's going to take you to the Maker forum, and it's going to be the Maker Relay tag. And I think it's like default listed by the latest at the top. And Maker Relay episode 18 was released last night. So go check that out. And a huge shout out to our community contributors who put that together every Monday. Tim, Anna, Jerry, and others, and Louis for actually translating it all into Spanish. So the Spanish version is up too, if you're more comfortable reading that. So yeah, without further ado, I'm going to give it over to Eitan and let him introduce himself, introduce the project, and then when we're ready, get Yaron on as well.
Okay. So hi everybody. And well, I can't see anything right now, so I don't know if that's.
I should be good now.
Now I can hear you.
Okay, cool,
yeah,
cool.
Okay.
Yeah.
So, Yaron, go ahead, start.
Yeah, go ahead. So, yeah, we'll have some noise. So, actually, maybe take a few minutes to display it. I'll be ready in 5 minutes.
Okay.
And David, if you can, yeah, I see how to.
So, hi, everybody. Eitan Katchka. I'm dived into blockchain, crypto, early 2014. Was one of the core team members in Lazuz, which was a carpooling application on top of the Bitcoin blockchain. Ethereum was not alive back then. Did one of the first token sales somewhere mid-2015. It was an adventure. Since then, been in and out from different crypto communities and projects. And currently, I'm leading the ecosystem development in B.Protocol.
Yeah. Okay. Hi, guys. So I'm Yaron Velner. Actually, I have a slide about myself. So maybe if you can start let's start the talk and then we'll explain more.
Let's do it.
Let's see if I can see both the screen and you guys. Yeah. Okay. So I don't know if there are questions. Let me know because I don't see the screen. Your screen. So yes, I'm
hold on. Are you sharing your screen yet?
Yeah. Okay.
Because we don't see it either.
Yeah. Okay. 1 second.
Yeah, take your time. And also, yeah, I wanted to reiterate what Yaron just said. If anybody has questions, feel free to put them in the chat, or use the Ask a Question feature on the bottom, and I'm happy to relay those questions for you and kind of ask them, kind of when appropriate, I'll butt in and ask. But feel free to totally jump in.
Yes. So I'm CEO and founder of B.Protocol. Also doing most of the architecture of it, etc. So yeah, B.Protocol aims to stabilize lending platforms such as MakerDAO and give more to their users as an incentive to use it. So it helps both the users and the platform. So a bit of background on myself. So now founder and CEO of B.Protocol. Before that, I was CTO of Kyber Network for the first 2 years. And actually, B.Protocol was seed funded by Kyber Network, and they are actually one of the first liquidators we have. Also, as my role is in Kyber, we did all the wrapped Bitcoin, smart contract design, and the design on the Ethereum side of the protocol. Prior to that, also with the Kyber Network founder, so we did Smart Pool as sort of semi-academic project, and we both actually did our PhDs in different universities, which was a smart contract mining pool over Ethereum back in 2016. And yeah, part of that, so I hold a PhD in computer science. Originally, I entered blockchain while researching smart contract formal verification, and end up doing what I'm doing now. So the agenda of the talk, so I am imagining most of you guys are familiar with MakerDAO, but even inside MakerDAO, maybe not all of you familiar with the MakerDAO lending system, CDP system, how it really works behind the scenes. So it explains the liquidation system and the lending platforms. We'll explain why some of the value go to the miners. And in MakerDAO, there are also other issues beside the miners, which will be addressed in the Liquidation 2.0. But it's also applicable to other platforms. We'll present our solution, then why you as a MakerDAO user would want to use it. And then after that, Eitan will make a demo on actual use case. Fine. So what is a lending platform? So lending platforms are now very popular in DeFi, hold a lot of locked value. So MakerDAO actually now is over $2 billion. Compound and Aave are also very big. So in all these platforms, and MakerDAO maybe is a bit of an exception because it's a bit different, but you have borrowers and lenders. Actually, in MakerDAO, you kind of lend from the own system, but to keep it simple, let's treat it as a standard lending platform. So you have people who deposit funds, you have people who borrow funds, and it always should hold that the debt of the user should be smaller than their collateral. And to make sure it is always the case, so typically these platforms take some margin, some safety margin. So in MakerDAO, to make an example, if you borrow 100 DAI, then you need your collateral to be worth $100 plus 50%, at least in Ether A. Now we have Ether B, which is a bit different, but basically it's like 150% over collateral. And then if the collateral was less than that, then you're subject to liquidations. So what happened in liquidations, and again, it changes from MakerDAO to Compound and Aave, but the concept is the same, and the concept is not new to DeFi. What happens is that someone has to pay the debt instead of you, and in return, it gets your collateral or part of it. And typically, to make it worthwhile for the liquidator, so you give him a collateral that worth a bit more than your debt. So for example, in Compound, if you have 100 DAI debt, then the collateral you get in liquidation will be 108, meaning 8% premium. So without liquidations, there's nothing to keep DAI pegged to US dollars. For platforms like Compound and Aave, the user deposits will be lost. MakerDAO is an important building block in ecosystem of billions of dollars of the DeFi ecosystem, also Aave and Compound. So basically, without proper liquidation process, all DeFi is worthless. So this liquidation or backstop is not something unique to DeFi. What is unique is how DeFi handle it. So you have it also in traditional finance. So surely you have lending platforms. The bank can liquidate your home if you are late on your mortgage payments. But something more in the line of DeFi in the centralized world are leverage exchanges like BitMEX, Kraken, FTX, etc., where basically they allowed you to do leveraged trading, which is basically at least one, if not one of the biggest use cases of also MakerDAO, which allow you to leverage it to trade with leverage, and Compound let you for a set of basket of coins, etc. So how they handle it in BitMEX, Kraken, and all the others? So they onboard big algo traders, and they force them to deposit some funds upfront. And recall that in these margin platforms, they can also take a very big leverage on these positions. So say in BitMEX, if me as a trader, I deposit $1 million, I can handle a position of up to $100 million, which is huge. So me as a trader that wants to do a backstop, I commit on some amount. The platform commits that, okay, if it is using me to liquidations, then it will give me certain premium. And typical premium for Bitcoin dollar is around 1 to 2%. In comparison to 5% in Aave, 8% in Compound, and in MakerDAO, the premium is not very well defined. And then whenever a liquidation is needed, so first they will try to dump the position on the order book, but if the market is too extreme, they will dump it on the algo trader. So they will just dump the position, meaning that me as an algo trader has, let's say, 1,000 DAI. Okay, also I have 1,000 Ether. So they will just give me the DAI debt of the user and will take the Ether from me without even asking me, but with a premium of 1%. What DeFi platforms did, and MakerDAO V2 started to do something different, but not quite, is first of all, you let everyone participate. You don't onboard anyone up front. But because you let everyone participate and you let them do it every liquidation from scratch, right? So now there's a liquidation that needs to happen. You just let everybody in. So if you let everybody in, no one has to commit beforehand to anything. Okay, so if these prices are good for me, I will try to liquidate it. If not, then not. I'm not committed to anything. I don't have any stake in it, etc. So there's no commitment. On top of it, okay, so they do offer a liquidation premium, the discount or premium, same. But because of how blockchain works, so now let's say on Compound, there is a 8% discount on 1 million DAI. So there'll be a huge race, to be the one who liquidates. So in MakerDAO, the incentives are even less obvious. So in the current liquidation, you have some incentive to bid first, etc. So it's not really different. Also in MakerDAO, but easier to understand on other platforms. So so for $1 million, I offer something like $80,000 premium. So it's very worthwhile to me to pay something like $20,000 in gas fees, etc. Meaning that bottom line is that I share a lot of the discount with the miners. Okay, so MEV is the miner extractable value. A big part of my profit will go to them. And the bottom line is that I liquidate only if it's convenient to me. I don't have any commitment, even though the platforms try to subsidize me. Big part of the subsidy will go to the miners. So I'm a trader. I do arbitrage in Uniswap. So along the way, I will also try to see if I can profit from MakerDAO, liquidations, or Compound. But now, if Uniswap liquidity goes dry, so I only have this simple system, and I don't have anything to do. So I will just not liquidate. So this is the DeFi approach, and now our approach tries to combine the two approaches. So we are permissionless, and we conceptually let everyone participate, but it's not done in every liquidation. It's done every epoch. So every few months, liquidators bid for liquidation franchise, and then only they can liquidate. So because they
quick question.
Yeah.
Quick question. So I know that at first you guys are launching with 5 liquidators maximum, right?
Yeah.
So basically, what do you mean they have to bid to be the franchise? Who accepts them into the franchise, and is it like they're buying into it? Like, yeah, I'm just a little more curious about that.
So now that we are going live, so we support up to 5 in the smart contract, and that part is upgradable. But initially these liquidators, we kind of handpicked them. They didn't pay anything, and on later stage, and we'll get to it later. So the user will have some governance and could decide on how much they pay, etc. And by the way, it doesn't have to be really in the form of payment. They might, for example, commit on a locked value, right? On locked liquidity, etc. So this will be in later stages after we have governance, but roughly these are the parameters. Okay, so they can pay some upfront, can commit on how much, and this is already doing now. So now they committed on sharing their liquidation profits with the platform. Okay, so the payment is not upfront, but they agree to share it, liquidations when they happen. So in that sense, instead of making the competition in every liquidation and let the miners decide who win the competition, so we only do it once in a while, and we do it by a smart contract. And technically, we can support much more than 5. Just for simplicity, initially we started with 5, not to make the smart contract too complicated. But basically, the idea is to give them some fairness in the form of round robin or a random selection, so it can support more. So once they paid for it, or at least build a system for it, so now they have a stake inside, right? They are now more committed. And now instead of sharing the discount with the miners, because again, so in traditional platforms, 2% premium, 3% premium is already very high. And in DeFi, for a good reason, we offer a higher premium because of all the quirks and complications. But now that is very similar to the traditional setting, so they can afford to share their discount with the users of the platform. So this is also part of the franchise, if you will. And then, so instead of liquidators, we liquidate if it's convenient to them. So they are committed. At this point, it's soft commitment. But again, as the DAO gets bigger, it can force them to lock liquidations. It can force them to take positions. So it really all depends on adoption and on the power that users accumulate. And the power of users will mainly stem from how many users there are.
Got it. Yaron, a quick question from the chat. Frank is asking, how long is each epoch? You said that every epoch there's like a new franchise or like an ability to like expand the amount of liquidators in the franchise.
The first epoch. So initially, because also these things take time to accumulate, and liquidations do not happen every day, etc. So we took a 6 months period. Where in this period, users accumulate their voting power. In this period, they still don't control the liquidation franchise, etc. So we onboarded already 3. again, they are still in integration process. So one is onboarded, two will be in the next months. We still have room for two more. If there will be more demand, we see as things go, but it's still not something the protocol can enforce. It will be able to enforce it only in 6 months. So in this sense, the first epoch will be 6 months or so.
And then after that, it's as needed.
After that, yeah. So I can tell you that the community will decide, right? But
exactly.
we aim for something, yeah. But we, like to be realistic, we aim for something like 3 months. But it's all depend. What is also special, because these liquidators are committed, because we know who they are, we can just talk with them. So too, there are not a lot of DeFi players still or market makers. And yeah, MakerDAO can also talk with them, and they do talk with them, and Compound everyone are talking with them, and there are only maybe 3 to 10 players in the ecosystem. But still, here you can really there's, at least in the long run, you can have this mechanism of users versus or along with liquidators, and it really gives them the option like to give their feedback for both sides. As opposed to so Compound will now decide to change the liquidation premium. So okay, they will have some Discord chat, they put it to a vote. Nobody knows who the liquidators are, right? There are a bunch of anonymous players who are not committed to anything. Here there's a real like a feedback loop where the liquidators have a voice and needs, and the users can also hear their voice and needs. Etc. So again, what we think will be realistic will be 3 months epoch, but eventually, technically, it will not be our decision.
I gotcha. That's cool.
Yeah. Okay. So what we get from B.Protocol, so we shift the miner extracted value to users, and it's actually more than that because we also move the uncertainty premium to the users. So liquidators compete on liquidation franchise and how much they will share with the users. The smart contract decides who get to liquidate, as opposed to today where the miner decides, who has no stake in the system or doesn't care less about anything besides fees. And all of that, also enable us to give something to users in order to use it via our interface. So users will share the proceeds with the liquidators. So liquidators get certainty, they are happy. Platforms like MakerDAO can get more committed liquidators. Users get a bit more, so it's like win-win all around, beside maybe the miners. Okay, so the architecture, and later we will also see it in the demo. So we build B.Protocol as an interface on top of existing platform, let's say MakerDAO. So we have an interface of smart contracts. And the guarantees we want to give to users is that, okay, you get exactly the same conditions interacting with a B.Protocol interface as if you would interact directly with MakerDAO. So you have your, deposit, borrow, repay, mint, all the usual CDP functions. And actually it's fully API compatible. So you interact with us, we send your funds with the smart contract directly to MakerDAO. There's no custody. The only difference is in the actual liquidation. So
Yaron, really quickly, sorry to cut you off. Can you zoom in a little bit while you're explaining this? Because we're getting a request in the chat. Or if possible, yeah, this is good. Thank you so much.
Okay, so here it will be, or here it is because we are live. Here it's MakerDAO. User interacts with B.Protocol interface, also a graphical user interface if he desires. And then I get exactly the same condition and also exactly the same liquidation penalty, liquidation condition as if he was interacting with MakerDAO.
So I have a quick question.
Yeah.
So the person that's using MakerDAO through your UI, they are creating a CDP that has like special permissions granted to B.Protocol, and and then B.Protocol creates the CDP in turn on Maker, but has that middle management ability, right?
Yeah. So technically, I mean, conceptually, yes. I mean, it's a smart contract, of course, non-custodial,
right?
User has full control. Technically, instead of using the standard MakerDAO CDP manager contract, we offer our own implementation of this protocol, and then it gives special privileges on liquidations.
Got it.
So during the liquidation, only the liquidity providers who are members of the liquidation pool will be able to liquidate. Now, as I said, the liquidation condition is exactly the same on MakerDAO and B.Protocol. So once liquidation reached, how do we make sure our liquidators have priority? So over time, liquidators repay some of the user debt. So they provided this cushion for the user CDP. So now the MakerDAO vault system thinks the user has a smaller debt. And then when it reached the original liquidation conditions, only B.Protocol allows liquidations and not the original MakerDAO system.
Right. So basically, it saves the CDP, or it saves the vault on Maker, and then because the person actually broke their original threshold, it liquidates the position manually on B.Protocol and kind of does it in a more efficient way.
Yeah. So not necessarily manually. I mean, Yeah. So more efficient, but again, like for the user, the more efficient way should interest MakerDAO. The user itself, once they get liquidated, that's not what we offer him, right? I mean, it's not like a better liquidation. The selling point is that in every liquidation, some of the profits go to this jar. And then according to the user rating and score, after 6 months, we distribute. I mean, it's everything with a smart contract, of course, but we distribute everything to the users according to the rating.
So quick question. Sorry, I have lots of questions here. So I know on Maker liquidations, there's a 13% liquidation penalty. Are you able to lower that penalty by using B.Protocol for users?
So again, at this point, what we promise to users, so no, I mean, users will get exactly the same penalty, at least at this point. But now only 6.5% will go to the liquidators and 6.5% will go to the jar. And at this point, it's also like a soft commitment, because if these liquidators will fail to liquidate, it will go to the original MakerDAO system. So at this point, we do not offer any better terms in the actual liquidations. Only the profit sharing, like distributing the profits. Moving forward, once we have a stronger backstop, it might be hard commitment, and then we can maybe promise more things. But at this point, so it's not only that we don't promise, we don't even try. So user will get exactly the same penalty.
Got it. So there's a question in the chat from Marcin. What is the user rating based on?
Yeah, so user rating is based on the interaction with the platform, how much he used it. Where in the MakerDAO case, it's pretty simple. It's how much DAI he generated over time. So basically, if you have 1,000 DAI debt for 24 hours, you get 1 point. If you repay it, you accumulate less. If you have, so in MakerDAO, like the metric to measure participants is how much DAI you generated over time.
Is there a penalty for getting liquidated, or is it good to get liquidated?
No. So there's exactly the same penalty as in MakerDAO.
No, I mean like a penalty to the user rating specifically.
No, but the user will, so in a liquidation, the debt will reset, and then it will stop accumulating.
Okay, that makes sense.
Yeah, so like everything you accumulated, this rating is yours. But if you have smaller debt, you will accumulate less over time. And if you have zero debt, then again you keep what you have, but you stop accumulating more.
Right. And I read that the user rating is also used as like a voting stake or like a governance stake, and it's not an ERC-20. It's not tradable. It's like a completely like user-based like score almost. It's not even a token. Am I right about that?
Yeah, definitely. So yeah. There's no token here to buy or to trade. The scoring is on chain by a smart contract, but it's not only non-transferable, it's not even ERC-20. It's just a function that returns your score. One cool, I don't know. So that's that. Once you have that kind of illiquid governance, so at this point we cannot really guarantee what the governance will do, whether tokenize it or not. But I mean, as far as we could handle it, we will be very strict in adhering compliance and security regulations, etc.
So users get a user rating that they can eventually use to vote on stuff. What do LPs in the liquidation pool, like the keepers, do they also get some form of ability to vote by their participation?
No. So the voting currently is 100% by the users. Not currently. 100% also no VCs or no team members. The liquidators, what they get is, like guarantee liquidation premium, which is far from the case they get now. So they are very, and this is why initially at least to onboard liquidators, we take the entire 13% and take half of it because 13% is huge, but like to kick off stuff, it's very appealing to promise them 6%, which is half of it now. But even when it goes to 4 or 5%, they're still very happy with it as long as it is guaranteed and they don't have to compete with everyone. In terms of voting right, like what we anticipate is that there will be some kind of negotiation, governance process where you have liquidators on the one hand, maybe with their own DAO in the future or not, and or maybe with the auction process, and you have users on the other hand, and they each like different stakeholders in the system. And users can decide whatever they want, but it's kind of easy to fork in the sense that you can just move your CDP elsewhere, right? If people are not happy, so if something goes wrong, etc., just you can always leave the system. So this is what like the governance process we anticipate. Like users will have to decide, but if it's not appealing to liquidators, the system is worthless, and then either you fall back to the MakerDAO liquidators, or liquidators will open their own B.Protocol with better conditions, and users can just migrate their CDP there. So we are live on B.Protocol. We have user interface only for ETH collateral at this point and ETH-A, if you know what I mean. So we already seeded the smart contract with $10,000 in Ether subsidy that will be distributed after 6 months to all the users, no matter what happens. And on top of that, there will be also the liquidation profits. Eitan will explain later, but user can import his CDP in one click, his existing CDP, and use our UI seamlessly. Why it's important to reach out, to the community, to CDP holders. So of course, our interest in the project is clear, but why should MakerDAO care? So if you have more vaults on the B.Protocol, then there will be more liquidations, or at least liquidators will expect to have more liquidations. And once this is very appealing to liquidators, then you can ask a lot of special requirements from liquidators. So one direction will be higher profits for users, but another direction is lock $1 million in advance, stuff like that. So, and if we go on the stricter requirements and even make them probable, smart contract will be able to force very formal requirements from liquidators. Then MakerDAO first enjoy higher stability, but it's not only against Black Thursday events, because even now, and let's say the system is usually stable enough, but the leverage it offers to users is very low. I mean, only 2x leverage. If you want to go to BitMEX levels of X100 or even X20 or X5, there's still a long way to go in terms of making liquidation stronger and more secure. So eventually, the more users we will have, the stronger liquidators we could get, which will eventually make MakerDAO stronger.
Yeah. To add to that, I think as MakerDAO increases the number of vaults that it provides, I think there's going to be optionality. Like, for example, we saw in ETH, right? ETH A is 150% collateralization ratio. You can only get to something close to 3 times leverage, and even then you're in a very risky position, so people don't even go for that kind of leverage. But now we have a governance passed ETH B that has a lower collateralization ratio, which allows people to basically get higher leverage on that facility, right? And I think that in the future there might even be products that are similar to USDC A right now, that is 101% collateralization ratio, that lets you actually get a ton of leverage on very small starting capital, but has a way higher risk premium or way higher stability fee to compensate the protocol for that. So I think that the need for more liquidators is growing, and the need for actually having kind of promised capital waiting on the sidelines, ready to participate in liquidations should they occur, is extremely important to kind of secure in the ecosystem, not just for Maker, but for really any protocol. So yeah, I really, really like what B.Protocol is doing. It's very interesting.
Yeah, okay, thank you. So that's conclude my presentation. So make sure you visit us at our website and try the application. Follow us on Twitter. And we're also hiring full stack developers, if you know anyone. And with that, I will hand it over to Eitan.
Hey, everybody. So David, how do I share my screen? Do I
You should be able to share it now.
Yeah. Okay, yeah. I see now. Okay, can you see it?
Sorry, my microphone mute toggle is being weird. Yeah, here it just popped up.
So, okay. Can you see my screen now?
Yes, get more out of all of these protocols.
Yeah. So this is the B.Protocol website, but we'll just dive into the app. So basically, this is the Uifb Protocol, and you need to connect with MetaMask. You need to make sure that if you do have an Ethereum vault on MakerDAO, which you would like to import into B.Protocol, you just make sure that it's on the same account you're connected with MetaMask. So just to make sure it's the same account that holds your vault. And once you connect, this is basically a new account on B.Protocol, but it holds a vault on MakerDAO. This is I'm just running this on top of Coven testnet, just so we can have a much quicker transactions and everything. So you can see here on the left side, you can see the input button, and you can see whatever how much Ether are locked, and how much is your debt, your DAI debt. And just with the one button click, you can input your vault. It's important to mention that the vault remains under your full control. There's it's under the custody of the user, no admin keys and anything. So it's still under your control, just exactly as it would be if you would handle that over Oasis or any other CDP manager.
I have a quick question about that. So, in the future, like let's say a year into this protocol, there's some early users that have a lot of user rating and have a lot and therefore have like a lot of governance sway. Is there an ability for governance to go in and, for example, like steal the positions that are in the, in the being managed by the CDP, like by the B protocol? Is there any way? Like, is that an attack vector that you guys see?
No. So there's no admin key. It's by governance, but yeah, the governance also does not have control on the. So no control on the user deposits. It will have control on the user rating and like profit sharing, but yeah, not on the actual vault. So everyone manages its own vault.
So you mentioned something about an admin key. Can you expand on kind of what backend controls there are?
So no admin key. So right now, the liquidators do have control on upgrading the liquidator contract. But again, the smart contract was edited and it works against even any adversarial liquidation contract. So what is upgradable and currently under 6 months time lock is the user rating process and the control over the liquidation mechanism. But still, it is guaranteed in the contract that the liquidation penalty cannot be bigger than MakerDAO penalty. So user funds are as safe as in MakerDAO, as long as they don't go through liquidation. Even if they do, it's according to a penalty. It's the same liquidation penalty. But all the extra features, they are under the governance.
Awesome. Thank you so much.
Okay, so basically, as you've seen, I've imported my MakerDAO vault into B.Protocol, which hold the 2 Ether and 200 DAI, which were on MakerDAO, and now I can do everything that I used to do on Oasis. So either I can deposit extra Ether into my account. You can see the design is a little bit different, I would say. So it's a little bit clearer, I think, where you can see exactly where where's your limit is going. Of course, you can withdraw your Ether and so on. And the same on the DAI side. Either you can borrow more Ether as much as you can on according to the limit, or you can just repay some of your DAI. You need to unlock your DAI if it's the first time you're using your account. You will have to unlock your DAI in order to be able to repay.
So Eitan, maybe one quick comment. So under the hood, there's exactly the DSS proxy system. Okay, so if you already have a proxy on MakerDAO, so basically everything is via the same proxy. The allowance you give is to the proxy, not to our contract, etc. Exactly same as in MakerDAO.
Nice. And while it's unlocking DAI, so I asked in the chat, is the jar that is like the user and liquidator rewards, is it distributed in ETH, DAI, a mix of assets? Do you want to quickly give a quick couple comments audibly for the recording?
Yeah. So I also answered on the chat, but yes, so the profits are in the form of the currency of the actual liquidation. So here, when we support only Ether and DAI, so it's only in ETH. Technically, the current deployment in terms of score supports also wrapped Bitcoin, but still not supported on the website. Moving forward, the governance will be able to give score to whatever collateral type it desires.
Yeah.
And then it will be by mix of assets. I mean, if you have a Bitcoin liquidation, it will be in wrapped Bitcoin. Ether will be in Ether. If you have Mana, it will be in Mana. But right now, what we expect to have is in Ether. I mean, in 6 months.
Yeah. So I have a quick question. So if these group of liquidators are not immediately selling the collateral that they bid on, for example, maker position, you bid with DAI for the collateral. what happened? Isn't that 6-month period where the winning collateral is just sitting in the jar? Isn't that volatile? Isn't that like a risk to liquidators?
No. So for them, let's say let's give number. Let's say they have to liquidate 100 DAI, so they get in return $113. So out of it, 106.5 they take to themselves. And only
and the remaining is in. Got it.
The premium that is being distributed. It's not the.
That makes a lot of sense to me. Yeah. Okay. Cool.
Yeah. So just to conclude that, so I can just repay. Once, if you can see, there's the borrow limit, which is once. Once I decide to repay, I can see how much it will go down, or if I'm gonna borrow more, it will show me how much, where do I stand according to my borrow limit. I can just repay some of my DAI, or using repaying the whole the maximum amount of DAI debt, and basically that's it. It's as plain as it can be. Here you can see that my user rating is growing, and Yaron hasn't mentioned, but during the first month, which started today, basically user rating is being calculated with an X2 factor, just to incentivize early users to join into B.Protocol. So whatever amount whatever amount of debt of DAI you're gonna borrow on the platform is gonna be calculated as double. Instead of for every 1,000 DAIs, you can get 500 DAIs will get you 1 point every 24 hours. So yeah, and currently the jar balance is $10,000. Again, this is on the Cover network, so it shows numbers which are relevant to the test net. On mainnet, there are still $10,000, a little bit more. And user rating is a little bit different. The total of user rating, once you stand here, you can see the total rating. So yeah, basically that's it.
So this is very interesting. So if users, vault users, manage their vaults through B.Protocol, and they, for example, never get liquidated, they actually still get a share of that basically 6%. So just by virtue of being here and being a good borrower and not letting your position get liquidated, you're even rewarded for that.
Yeah,
so
exactly.
This is very cool.
I've answered that on the chat as well. So someone was asking, who's getting the reward. So the rewards, the jar is being distributed among all rating holders. So if you add a debt during these last 6 months, once we're in end of April 2021, 6 months from now, any rating that you hold, will get you a portion, proportional part of the jar balance, as it will be in 6 months from today.
Very, very, very cool. I like that a lot.
Yeah, so basically that's it,
Yeah, this had, like said in the chat, this has potential to be huge. I'm curious about what is on the future roadmap.
I'm not on mute. Yeah, so future roadmap, is twofold or even threefold. So for us, we want to integrate, and we will integrate also with other, projects like Compound. So Compound have all the big ones, also with new platforms, and to really bootstrap a very strong backstop. As far as the MakerDAO community concerned, so what I see the future is kind of, making or helping us bring, the liquidators to MakerDAO. Then once we have this backstop, which is a very strong backstop, so you got this kind of interaction, and there will also be some governance of what kind of strict requirements you can put on liquidators. And then, to be specific on MakerDAO, there could be a lot of very interesting applications, right? But it all depends on adoptions and how it goes and everything. So that's it. So also, moving forward, after we combined with the big ones. So the big ones are opt-in. Currently MakerDAO didn't do any change. User can decide whether to use it or not. Moving forward to new platforms, it is our belief that this is like a better or stabler design for a lending platform. And we definitely see, like a need for like native integration with us. And then like to be like the first backstop of a platform rather than a kind of opt-in, such as in a MakerDAO. So these are our plans.
It's basically a new DeFi Lego piece, which will be embedded in whatever platform or products that are in need for a backstop. So
nice. So then I have another kind of like tangent question. So recently, you guys got whitelisted for oracles. I'm curious about your use of oracles in the platform and in general how you approach this, because I know that each of these lending platforms kind of have their own strategies for where they get like reference prices, and I'm curious how that interplays inside of B.Protocol.
So we got whitelisted to two contracts. One is the OSM, one is the so-called real-time or median price. So our reference price for liquidation, for whether liquidation should occur, is actually none of those. So our reference price is, I'm not sure how people are familiar with it, but we simply look at the VAT contract, and we have exactly the same conditions. So the VAT contract is 1 hour delay on top of the OSM, etc., etc. So liquidation occurs exactly at the same conditions, putting aside the cushion we provide. So this is for the actual liquidation. The OSM is needed because it helps us do this protocol to how to share a single cushion between liquidators, so they can put a cushion only when liquidation might happen, in the next hour. And finally, the medianizer is used for the reference price in actual liquidation. So we liquidate according to price feed, and it's according to MakerDAO price feed. So the user will get 13% off the MakerDAO. So actually USD to ETH price, not DAI to ETH price. And then internally for the proceeds sharing, so we use another layer so we have this, we use currently DYDX, but it's upgradable. On our, actually we do the USD to DAI price in case it's not one-to-one, because actually user liquidator profits depends a lot on the DAI to dollar price. So there's another oracle which is not related to you, and like from the user point of view, it's really out of the protocol, so it can be safe. But like to summarize, whatever all the user aspect sides, in order to make the system as safe as MakerDAO, so it all relies on MakerDAO price feeds.
Nice. Yeah, that makes a lot of sense. Yeah, good answer. Thank you. Let me see. Mariana Conti asked, since you're using DS proxy behind the scenes, can you add buttons to combine deposit ETH plus withdraw DAI in one transaction, or even repay plus withdraw?
Yeah. So again, we can. Technically we can. We will consider it definitely. We try to. So now we went live. We definitely try to get feedback from users on more features. But again, technically it is possible. We thought that for new users, the current interface, which is more familiar to Compound and other less frightening interfaces, might be easier. But yeah, MakerDAO users who are really used to the notorious and really frightening interface, they might enjoy that better.
Yeah, I think we try and keep it simple. I think as much as we would like to see MakerDAO users, current MakerDAO users, import their vaults into B.Protocol and help secure the platform that they're using. It's also an opening for new users in DeFi, who's looking to jump in, and kind of the current UX is not very supportive to many. And I think what B.Protocol is bringing, with its new UX is, it's nice. It's simple, nothing.
Yeah. But definitely over time, we'll take user feedback into consideration. And
yeah.
Pedro asked in the chat, any plans in the future to add the ability to swap the borrowing asset? So like, I guess almost like migrating from ETH to like KNC, or like basically migrating vault to vault.
So it's not currently on the roadmap. Again, depends on user feedback, etc. Again, the migration, but basically like providing a one-click button to do it. I mean, because technically, if you want to migrate from ETH to wrapped Bitcoin, you need wrapped Bitcoin, right? And then maybe with a flash loan or something. So okay. Probably it will not happen in the next month or so, but it's definitely something interesting.
Yeah, it sounds like there's a ton of potential for like I guess outside of the main focus features of just the liquidations, right?
And by the way, like moving forward, this is like an open protocol. Anyone can build a UX on top of it. We will definitely try to focus more on the backstop aspect as opposed to offering flashy new features. Which we hope like the community, we hope also to along the way integrate with DeFi Saver, all the others, and really focus on the backstop size, and just to make the best backstop, and let all the other user-facing features, to build permissionlessly over our protocol.
This definitely makes the entire DeFi ecosystem way more robust. So I think what you guys are doing is extremely valuable. And thank you guys for coming on the community call. This was super interesting. I hope that the people watching, both here live and on the recording, learned something and kind of got some value out of this. So likewise, let me see. Yeah, if there's any final questions in the chat, feel free to ask them now. But otherwise, yeah, if you guys have any last words.
From anyone listening or here on the call, or just help us share the news with the community. It's a small community, but yet so many sources of information, resources of information. So just help us bring it out, and so thanks for that, David, for this opportunity.
It's my pleasure. It was my pleasure. All right. With that, happy Tuesday. It is 1 p.m. here in New York and the top of the hour wherever you guys might be. So, happy Tuesday, and excited to see where B.Protocol goes. It's going to be good. Take care, guys.
Thank you.